You know that uniquely frustrating modern experience, right?
Yeah.
You're sitting on your couch on a Tuesday night.
Oh, yeah, we've all been there.
Right, and you finally track down the exact item you've been hunting for online. You click buy, you get the confirmation email, and, you celebrate a little bit.
Definitely.
But then, like, 3 days later, you check your inbox, and there it is, the dreaded follow-up email.
Oh, no.
Yeah, saying they are so sorry, but the item you purchased is actually out of stock.
It happens so often that we almost expect it now, honestly. And as a consumer, you usually just blame a glitch in the website and move on.
Right, exactly.
But when you look behind the curtain and how businesses actually operate, well, that email isn't a glitch at all.
It's not.
No, it is the symptom of a massive structural failure. It means you have a fundamental lack of communication between internal departments.
Oh, I see.
Yeah, the sales software is out there happily selling inventory that the warehouse team doesn't actually possess, simply because their separate systems aren't talking to each other in real time.
Man. So that operational silo is exactly what we are tearing apart today.
Yes, we are.
We are taking a deep dive into the APS accounting and stock control system, and we are using the official, highly comprehensive APS guidebook as our primary source material for this analysis.
It's a really fascinating document.
It really is.
Yeah.
The goal here is to understand how modern enterprises are trying to fix that exact disconnect.
Right.
We're looking at how a system like APS is designed to function as like a central nervous system for a company.
Exactly.
Linking the dusty physical realities of a warehouse floor directly into incredibly advanced financial forecasting, and tying all of that into complex international payroll operations.
To understand how they attempt to solve this, you really have to stop looking at a business as a collection of isolated departments.
Like separating sales, warehouse,
Yeah.
HR, finance.
Right. The manual treats the enterprise as a single, highly integrated ecosystem,
Okay.
where a physical action in one area instantly alters the mathematical reality of another.
So where does that actually begin, though? I mean, if we want to trace the nervous system, where is the starting point in the source material?
Well, it starts right on the floor, the warehouse.
Where the physical goods actually exist and move.
Exactly. The guidebook details the primary tool the warehouse workers use, which is a PWA.
Right. I saw that acronym used heavily in the manual, the Progressive Web App.
Yes.
For someone who isn't a software developer, what does that actually mean in the context of a warehouse worker holding a smartphone?
So a progressive web app means the worker isn't downloading some clunky, massive program from an app store.
Oh, okay. So no huge files.
Right. No manual updates or specialized hardware. They're essentially accessing a highly secure, live web environment that looks, feels, and behaves exactly like a native app on their standard smartphone.
That makes a lot of sense.
Yeah, and it allows the company to push system updates globally in an instant without relying on the worker to hit update on their device.
But the manual lays down a massive underlying rule regarding this PWA that really surprised me.
The connectivity requirement.
Yes. The guidebook explicitly states that this mobile app is entirely online only.
Completely.
Like, it requires a continuous, unbroken internet connection at all times to function. There are absolute zero offline capabilities built into this application.
We really have to reinforce why that is structurally vital to the entire system.
Okay.
Zero offline capabilities. None.
Wow.
If a worker walks into a dead zone in the warehouse and loses their Wi-Fi or cellular connection, the app simply stops processing transactions.
Just completely stops.
Until the connection is restored, yes. And this isn't a technical limitation or a flaw, It is a deliberate, non-negotiable design architecture.
See, my initial thought reading that was, well, wouldn't offline sync be better?
A lot of people assume that.
Right. Why not let the workers scan 100 boxes in a dead zone and just upload the data when they walk back to the router at the end of their shift?
Because of the phantom inventory problem we opened the show with.
Oh, the out-of-stock email?
Exactly. Think about the massive risk of offline syncing. What happens during those 4 hours before the worker uploads their offline data?
The sales team might sell items that the worker just loaded onto a shipping truck.
Yes. Or the finance department might make a panicked purchasing decision based on inventory numbers that are already outdated.
I get it now.
By forcing an online-only continuous connection, you guarantee that the entire enterprise is operating on a single version of the truth at any given millisecond. There is no lag.
So, the worker on the floor is permanently tethered to the live system.
They have to be.
And once they are online, the way they actually interact with the app is fascinating. The system utilizes continuous barcode scanning through the smartphone's camera.
It totally changes the entire physical ergonomics of the job.
How so?
Well, in older systems, the workflow was incredibly disjointed. A worker would scan a barcode, look down at the screen, tap a button to confirm the item.
That sounds slow.
It was. Then they'd wait for the screen to load, tap another button to reopen the camera, and only then move to the next box.
But the APS system just keeps the barcode field continuously active.
Exactly.
It's essentially giving every warehouse worker the power of the lightning-fast checkout lane at the grocery store,
Yeah.
where the cashier just slides items over the glass scanner as fast as humanly possible. They have that rapid-fire capability right in the palm of their hand.
And the manual details a very specific UX design choice that makes this possible.
The audio cue.
Right. The app produces a distinct 1,000 hertz audio beep for every successful scan.
The specific frequency matters there, right?
Highly, a 1,000 hertz tone is piercing enough to cut directly through heavy ambient warehouse noise.
Like forklifts, machinery, loading dark doors.
Exactly. Because the system is continuously active and provides that immediate auditory confirmation, the worker never actually has to look away from the physical boxes.
They don't even have to check their phone screen.
No, they rely entirely on the audio feedback to keep moving.
That is brilliant. But having perfectly accurate rapid-fire warehouse data isn't the end goal, is it? It's just the fuel.
Yeah.
If we know exactly what inventory we have on the floor right this second, how does that change the way the financial side of the company behaves tomorrow?
Well, it fundamentally changes the timeline of the finance department.
Okay.
Before the system even grants that mobile app access to the camera to start scanning, the software auto-verifies the specific warehouse location using the phone's hardware.
Wait, it checks where they are physically standing?
Yes, it confirms the worker is standing exactly where they are supposed to be standing for that specific inventory count or transfer.
Oh, wow.
You cannot accidentally log items into a Dubai database when you are physically standing in a Riyadh facility.
Because it knows.
Right. The physical reality is instantly mapped to the digital ledger.
And that instant ledger feeds directly into the AI.
Yes, the APS AI-powered 90-day cash flow prediction tool.
The guidebook spends a lot of time on this. It really frames it as the ultimate financial brain of the operation.
Because liquidity is the lifeblood of any business.
Right.
You can show massive profits on paper, but if you do not have the actual cash on hand in your bank account to pay your suppliers tomorrow, you are out of business.
Done.
Exactly. The AI tool's purpose is to monitor the continuous data streams like those real-time verified warehouse scans and use machine learning algorithms to establish a baseline of what normal looks like for your specific operation.
It builds a behavioral profile.
Yes.
It tracks standard inventory consumption rates, historical payment cycles with different vendors, and seasonal spikes.
It takes all of that historical data and projects your cash position 90 days into the future.
Wait, hold on. I have to push back on this premise.
Back up.
A 90-day projection based on historical averages sounds incredibly dangerous if you were dealing with humans.
Why is that?
Because humans are chaotic. If I have a client who has paid exactly on time for 5 years, the algorithm assumes they will pay on time tomorrow. But what if that rock-solid client suddenly ghosts me and pays a month late? Doesn't relying on a historical trend tell the business owner they are financially fine right up until the moment they drive off a cliff?
That is the exact vulnerability of basic automation, and it is why the source material distinguishes this as true artificial intelligence.
Oh, really?
Yeah, the AI isn't just running static formulas based on past averages. It utilizes probabilistic weighting and continuous variance analysis to actively hunt for those exact anomalies.
So it actually watches for the human curveballs.
It is designed entirely around them.
Wow.
When the machine learning algorithm detects a deviation from the established baseline, let's say a reliable client is suddenly 3 days late on an invoice, it doesn't just record the delay.
What does it do?
It instantly recalculates the probabilistic weight of that client paying it all, and it dynamically recalibrates the entire 90-day liquidity forecast based on that new risk factor.
So it's not a static map. It is literally ways for your cash flow.
Yeah.
The second a client pays late, which is the financial equivalent of a traffic jam, the algorithm immediately recalculates the ETA of your business liquidity.
That is the perfect analogy. And conversely, if a client pays 3 weeks early, the system understands you now have an unexpected influx of cash today.
Which alters your purchasing power for tomorrow.
It is constantly adjusting the route. For a listener running a small or medium-sized enterprise, This provides the predictive power of a dedicated high-level financial analyst.
Without having to hire an entire team.
Right. Historically, you needed a room full of people running complex variance models every single day just to get a slightly inaccurate projection.
Hmm.
The software is doing the variance analysis continuously.
But if the Waze ETA tells you that you have the cash, we have to talk about where the vast majority of that cash actually goes.
Yes.
Because a brilliant AI cash prediction means absolutely nothing if you cannot manage your largest operating expense,
Labor.
the people. If the money doesn't get to the workers accurately and legally, the warehouse stops, the sales stop, the whole ecosystem collapses.
Payroll is where the pristine mathematical data hits complex human reality.
Yeah, and the APS payroll module in the guidebook is intense.
It really is.
It's not a simple calculator that multiplies an hourly wage by hours worked. It is built to handle incredibly complex, overlapping compensation structures across multiple international jurisdictions simultaneously.
Yeah.
Let's slow down and actually look at the mechanics of how it slices up a paycheck, because the manual outlines 3 distinct layers.
Okay, to understand the complexity, let's look at a hypothetical worker.
Sure.
The first layer the system calculates is employee compensation. This is the baseline, their agreed upon salary.
Right.
But the system also has to dynamically pull in real-time data for sudden performance bonuses, commission structures, or daily overtime rates that fluctuate based on the specific shift they worked.
So layer 1 is what the employee theoretically earned, but they don't get all of that.
Far from it. The second layer calculates employer liabilities. These are the hidden costs of employment. The system calculates what the company owes to external bodies simply for employing that person.
Like what?
Well, this could be mandatory employer contributions to a national Social Security fund or a mandated pension scheme. The company has to have the liquidity to cover this layer, even though the employee never sees it.
Then we hit the third layer, which is legal statutory deductions.
Yes.
This is where the money is actively pulled out of the employee's gross pay before it hits their bank account. Income taxes, mandated health insurance premiums, union dues.
Exactly. And the software has to calculate all 3 of those layers flawlessly.
While keeping the math perfectly aligned with the real-time cash flow predictions we just talked about,
Yes.
when you look at how the system manages those 3 layers across borders, it operates like an automated compliance firewall that adapts live to legal changes.
It does. It's constantly reviewing every paycheck against regional labor laws.
Which is huge.
Regional compliance is arguably the largest operational risk a growing company faces today.
Really?
Oh, absolutely. It is not just about doing the math correctly, it is about doing the law correctly. Imagine you are the listener trying to expand your business into the Middle East.
Oh, okay.
The APS system focuses heavily on this region in the manual. In the Gulf Cooperation Council, the GCC, governments mandate the use of the Wage Protection System, or WPS.
The guidebook dedicates a significant amount of space to the WPS. It's an electronic salary transfer system, right?
Yes.
Like, you can't just hand your workers cash or write them a personal check drawn from the company account.
You absolutely cannot. The governments require highly regulated encrypted file formats to be generated and submitted to the central banks to prove that your employees were paid their exact wages on time.
Oh, wow.
And the APS system automatically generates those precise file formats. Think about the anxiety of running a company where a single misplaced decimal point in a manually exported spreadsheet could cause the central bank to reject your entire payroll file.
And if the file's rejected, the employees don't get paid.
And the regulatory consequences are immediate.
Yes?
The system acts as a shield against that exact human error. In Saudi Arabia, for instance, a payroll violation can lead to fines of 10,000 rials per offense.
Per offense.
Yes. More severely, the government can suspend the company's commercial registry.
Wait, a suspended commercial registry literally halts your legal ability to conduct business. It stops the entire company cold.
Over a formatting error in a spreadsheet.
That is terrifying.
It is. The compliance firewall prevents that. Furthermore, the system actively adapts to sudden legislative changes.
How does it do that?
Well, if you have a multinational workforce, you might have employees with completely different tax residency statuses in Egypt, the UAE, or Saudi Arabia.
Right.
When a government abruptly announces a new tax bracket or a modification to a Social Security deduction, the AI compliance monitor detects the legislative change.
Automatically.
Yes. It automatically updates the calculation formulas for Layer 2 and Layer 3 before the next payroll cycle even begins.
So the business owner doesn't have to spend their evenings reading government gazettes to figure out if the tax rate changed by 0.5%.
No, the system just absorbs the legal update and executes it.
It is risk mitigation on a massive automated scale.
Absolutely.
Stepping back and looking at the entire journey the guidebook lays out, the interconnectedness of this ecosystem is staggering.
It truly is.
Think about what actually happens when a worker in a warehouse scans a single box.
Right.
There is that distinct 1,000 hertz beep from their smartphone.
An action that takes a fraction of a second.
But because that progressive web app is strictly online only, with absolute zero offline capabilities,
Which is key.
that single audio beep instantly ripples through the entire corporate structure.
Yeah.
It updates the central inventory ledger in real time.
Yes.
That updated ledger feeds immediately into the AI, which runs its variance analysis and recalibrates the 90-day liquidity forecast like a GPS rerouting around traffic. And that newly updated liquidity forecast ensures the CFO knows exactly how much cash is available to safely process the complex three-layer payroll.
Right. Generating the exact encrypted WPS files required by local tax law without incurring a single regulatory fine.
It completely redefines what we mean when we talk about technological efficiency.
It really does. Efficiency isn't just taking a manual process like counting boxes and making it digital.
Right.
True efficiency is creating a unified, living ecosystem where every single physical action instantly informs the company's financial and legal reality.
Which really leaves you with a profound question to mull over.
Yeah.
If we are moving into an era where integrated systems can flawlessly track our physical goods in real time without offline lag,
Right.
and if artificial intelligence can continuously run probabilistic variance models to predict our cash flow better than we can,
Yeah.
and if the software acts as an automated firewall handling complex international legal compliance, what is the future role of the human accountant?
It's a massive question.
Are we watching the final days of the traditional number cruncher? And if so, are we witnessing the birth of a new era where the humans working in corporate finance purely act as strategic philosophers?
Guiding the intelligence of the machine rather than doing the math themselves.
Exactly. It is definitely something to think about the next time you hear a scanner beep.